They use it as a tax-free family bank. In this episode, I am going to address the question, why are wealthy people buying so much life insurance? Get ready, I'm going to blow you away because so many wealthy people buy more insurance than ever after age 65 or 70 because of what I'm going to share with you next. So my name's Doug Andrew, and I've been a financial strategist, a retirement planning specialist for more than 4.5 decades. And I've helped many, many people protect their wealth after accumulating it. And oftentimes people, when they first came to me, would say, well, I want to insure myself so while I'm young, okay? For example, when I was 30 years old, my wife and I already had our 6 children because the doctors said because of her health conditions that we ought to have our children quicker. So we had 6 children. Now, let's say back when I was 30 years old, and that was a long time ago. I mean, I have an Apple Watch right now, but my first watch was a sundial. Yeah. So I'm pretty old. Now, at age 30, with 6 children, let's say if I was making $100,000 a year, if I want to be responsible and accountable, I would insure myself so that if I died in an accident, I wanted to make sure that my wife and our 6 children would continue to be able to have some dignity living, and they would have their music lessons, and they would be able to do the things they wanted to do and go to school and what have you, and have the same lifestyle they would have had I stayed around. And so to be responsible and accountable, I can insure myself for up to 30 times my income when I'm 30 years old. So $3 million. And $3 million can easily generate $250,000 to $300,000 a year of income. So that's what I would do. But as I get older and the kids leave the nest, now we don't have a worry about them anymore being dependent unless they move back home. My wife has fewer years to live if I died when I'm 65. Did you know that I can only qualify for maybe 6 or 8 times my income at that age? Yeah, insurance companies won't insure you for any more than the economic loss that would be suffered by those who you leave behind, the beneficiaries. A lot of people don't understand this. But see, at age 65, maybe my income is $300,000 or $500,000, so 6 or 8 times my income would still be a pretty fair amount. Or if I have a high net worth, I can qualify for at least 100% of my net worth. So if everything I own minus what I owe, that's your net worth, if that were $1 million or $5 million, I can qualify for $5 million of insurance, no questions asked, with an underwriter with an insurance company. Now, a lot of people would go, if I have a $5 million, why do I need insurance? Well, quit looking at what it is, look at what it can do. Because if you were to reroute 1 or 2 million of that into an insurance policy and max fund it, which is what I recommend, you're using it for living benefits, every million can generate 60, 70, 80,000 a year of tax-free income out of the insurance policy. What else can do that? And when you ultimately die, every million blossoms to about 2.5 million when you die. What else does that? So I often sort of cut to the chase and say, why would you generate this much income out of traditional IRAs and 401ks when you could generate double, triple, or quadruple that and increase the liquidity and safety? And why would you, at the end of the day, when you die, when you check out, when you graduate, would you leave behind this much when you could leave behind double or maybe triple that if it doesn't cost you anything? And people go, say what? Doesn't cost you anything? Well, I'm not paying for it. See, it's being paid for inside of a properly structured max-funded insurance contract with a minuscule portion of money that people shell out in unnecessary income tax. And so when people say, why are so many wealthy people buying so much life insurance? It's because of this very fact. So let me share with you some famous people who have used life insurance for this very purpose. So again, the merits of a max-funded life insurance policy is to accumulate cash tax-free. When you need the money, you can access it before you die, totally income tax-free, if you do it the smart way. And then when you ultimately do die, it blossoms in value and transfers tax-free. So who understood this? Have you ever heard of Disney? Yeah, Walt Disney used life insurance. Do you know he went broke 7 times and had a nervous breakdown before he finally made it? And when he finally came up with the idea, he told his brother, hey, I have this idea. Because Walt was actually afraid of mice. Did you know that? And so he wanted to make a mouse look friendly. And so in a cartoon, he named the mouse, I think it was Steamboat Willie, which became Mickey Mouse. In order to take that idea and create Disneyland, Walt Disney barely saved from going under the concept of Disneyland by taking tax-free money out of his life insurance policy. Did you know that? Otherwise, we probably wouldn't have Disneyland today. Have you ever heard of J.C. Penney? J.C. Penney, with all of his department stores and so forth, he saved his company from going under by accessing money out of his life insurance policies tax-free. And then when he started making money again, he put it back and it continued to grow tax-free. Ray Kroc, you know who that is? The founder of McDonald's. Same thing. He used life insurance to save McDonald's and keep it going, and now look at it. I mean, McDonald's are everywhere in the world, probably the most successful, fast food franchise in the world. Well, what about David Walker? If you don't know who that is, David Walker was the former Comptroller General of the General Accountability Office of the United States. And he actually resigned when President Obama got into office because we came so close in 2008 to the world, especially America, collapsing financially. And he wanted to tell the public the truth, and they wouldn't let him. And so he resigned. But he went around speaking, and he told people all throughout America, the safest place, in my opinion, where I put my money, he said, max-funded life insurance. And he said, universal life is the one. That's where I put my money. So this is where wealthy people put their money. So let me emphasize why this is so critical and then how you can do this too. So I'm going to move into the tax-free accumulation, access, and transfer next, and then also how every million can generate $80,000 a year of tax-free income instead of $40,000, which is where most people have their money. It only generates a 4% payout. So again, the only vehicle that allows you to accumulate money tax-free and then be able to access that money tax-free from age 65 till your age 120 until you die. And then when you ultimately do die, it blossoms and transfers tax-free is max-funded insurance contracts structured correctly under sections 72E, 7702, and 101A of the Internal Revenue Code, as long as you do it in compliance with 3 tax citations. They are acronyms: TEFRA, that's the Tax Equity Fiscal Responsibility Act, passed in 1982. DEFRA, which is the Deficit Reduction Act of 1984, and TAMRA, which stands for the Technical and Miscellaneous Revenue Act of 1988. You're probably going, say what? Well, I'm going to share with you how you can learn how TEFRA, DEFRA, and TAMRA and those 3 sections of the code can allow you to understand the secrets that heretofore maybe only wealthy people took the time to learn. Because when you understand the power of this, you can do what wealthy people do. You can reposition your serious cash so you don't have to worry about money in retirement, in your golden years. You can do whatever you want, and you don't have to read the Wall Street Journal every day. You know that your money, every $1 million, is safely generating $60,000, $80,000, $100,000 a year of growth or income, if you need it, tax-free. The IRS knows you're receiving that money, but they know everything, but it's not taxable. It's cut and dried. It's been grandfathered for over a century. This is what wealthy people do. But you can do it too, and you will be wealthy. As you begin to understand that, then at the end of the day, when you ultimately pass away, everything that's in the insurance contract will then transfer tax-free, and it can often double or even triple and transfer tax-free. For example, right now I'm 68 and a half years old. If I died tomorrow in an accident, every million in my portfolio of what I call laser funds, those are life insurance contracts, would blossom right now to about $2.5 million and transfer tax-free in what we call our family bank. Now, this isn't a chartered bank like down the street. This is a conceptual bank. This is where we put our financial assets and also our wisdom and knowledge and our stories and all the things that we want to leave behind to our posterity, rather than just dumping fish in our kids' and grandkids' laps. We want to leave behind how to fish, but we want the financial resources to continue to grow. So every time the oldest patriarch or matriarch dies in our family, it actually generates a windfall of tax-free capital that goes into the family bank. We allocate about 20% of that tax-free money to put life insurance on the next oldest, healthiest family members. They can use it for tax-free income, and when they die, it blossoms again. And for generations, it stays ahead, whereas most families, by the third generation, the money is gone. It's been spent. This is very, very powerful stuff. So this is sort of a glimpse into why so many wealthy people buy so much life insurance. If this is intriguing you, again, I encourage you to share, like, comment, but here's what I want you to do. Learn. This is our 11th book, and it's been flying off of our warehouse shelves. It retails for $20, but I want to gift you a free copy. Here's how you can claim your free copy of this 300-page book, which is actually 2 books in one. This white one is about 200 pages, 14 chapters, that has all the charts and graphs and explanations for the left brain learners. If you're a right brain learner, you learn by stories. You flip it over and you read 12 chapters here that contain 62 actual stories of how this is used by all kinds of people. You don't have to be wealthy, but if you use this, you will become wealthy, okay? Isn't it time you became wealthy? So click below, claim your free copy, contribute a nominal amount towards the shipping and handling. I'll pay for the book, and you will begin to learn how you can accumulate wealth and preserve it and transfer it down to your loved ones into perpetuity.